Welcome to the Ontario Mortgage and Real Estate Insights podcast. I am your host, Steve Hamowen. Whether you are a seasoned real estate investor or just curious about the market, this podcast is your go-to source for the latest developments, trends, and insights in the Ontario real estate and mortgage sectors. Today, we are diving into some eye-opening statistics about Canadian household debt and insolvencies, drawn from a recent study by Bankruptcy Canada. The study reveals that Canadian household debt has reached a staggering record high of $241 trillion. Out of this, 26%, or $626.6 billion, is unsecured debt. Unsecured debts include auto loans, credit card debt, and installment loans. Specifically, auto loan debt has seen a significant growth of 6.2% from the same period last year. The average Canadian debtor now owes $55,328 in unsecured debts, a 0.94% increase from the previous year. As the cost of manufacturing continues to rise and supply chain issues persist, the cost of owning a vehicle has surged. According to Sands, a trustee at Bankruptcy Canada, this rise in costs is one of the primary drivers behind the growing auto loan debt. Additionally, the study indicates that the number of consumers missing payments of 90 days or more has also risen year over year. Sands notes that as the cost of living continues to escalate, more Canadians are turning to credit to make ends meet. The study also highlights a significant increase in credit card balances among insolvent debtors. Notably, those under 30 have experienced the largest increase in balances. Consumers under 35 are 18% more likely to have a history of delinquent payments. Overall, credit card balances for all Canadians have increased by 13.7% compared to the prior period. Insolvencies among homeowners and older consumers have also seen an uptick. The rapid rise in mortgage rates over the past few years, which have remained high throughout 2024, has significantly impacted homeowner bankruptcies and consumer proposals. Although insolvent homeowners still represent a low percentage of overall insolvencies, the rate has doubled in recent months. Sands explains that homeowners facing insolvency often have little equity and are therefore unable to refinance to cover their unsecured debt obligations. As a result, many homeowners turn to consumer proposals to manage their unsecured debts. A consumer proposal is particularly popular among homeowners because it protects their home from creditors. As high interest rates and the cost of living continue to rise, the study anticipates that consumer insolvencies will keep climbing throughout 2024. This paints a concerning picture for the financial health of many Canadians, making it more important than ever to stay informed and take proactive steps in managing your finances. That wraps up today's episode of the Ontario Mortgage and Real Estate Insights podcast. I hope you found these insights on Canadian household debt and insolvencies both informative and thought-provoking. If you enjoyed today's episode, please subscribe and leave a review. I am your host, Steve Hamowen, signing off. Stay tuned for our next episode, where we will continue to bring you the latest news and insights in the world of Ontario real estate and mortgages. Until next time, take care and stay informed.